Thank you for taking time to learn about Quality Term with us today. This is Rob Barnes, President and founder of Integrated Insurance Consulting. We've all made big purchases before, and we know that a quality product will cost more, but often offers a better long-term value. With the commoditization of term, it's more important than ever to work with someone that instantly turns you and your clients into professional shoppers. Quality term adds flexibility and options if or when things change later in life. Now, I want to start by recognizing that the life insurance conversation is different than any other insurance conversation you might have. Death is not an if. Certain parts of the life insurance industry have become commoditized. You can buy life insurance from many sources, but fewer take the time to educate and help you decide what the right fit term is for you, your family, and your future. Insurance companies know many shop on price alone, so carriers have adjusted what products and features they offer. Today, you might be planning to use term insurance protection in case of an untimely death. The plan is to grow your assets and pay off your debts so you won't need life insurance later. But stuff happens and things change in life, and later you might decide to have coverage longer than originally planned. And that's where Quality Term comes in. You see, life insurance is all math, using assumptions for interest, expenses, and mortality. And since these items are forecasted and may turn out negatively, carriers have to be careful about how much risk they take with each insured. Some companies have a much longer and reliable history of dealing with these variables. All carriers are exposed to unforeseen situations like the pandemic, which did cause substantially increased mortality to the industry. Carriers have more mortality risk with longer duration term, and if they allow you to extend coverage without underwriting, there's a cost to that, making it more expensive to offer because some will convert and some may have to. Carriers are concerned about accurate pricing for each risk they take on. The shorter the period of time you are with them, the less likely it is they'll pay a claim. In this slide, we price $1 million of coverage for a healthy 40-year-old female. The longer she wants to be covered, the higher the cost. You see, the risk of her dying is 100%. We just don't know when it'll be. So let's take a look at what happens if Mary buys a 20-year term and later decides to have coverage longer than she first thought. If she's healthy, she can underwrite for new term insurance. But if she's not healthy or insurable, this is where Quality Term shines. You see the price difference if Mary decides she wants coverage for 10 more years? It's substantial. If Mary decides she wants coverage for 20 more years, it's a big difference as well. And lastly, if Mary decides she wants coverage in force when she dies, no matter the age, you can see the price differential there. Yes, she could have saved $100 a year for basic term, but you can see the cost is on the other end if she decides to hold coverage longer. The value of Quality Term with more is it offers a potential long-term care solution if her health has changed or if certain health events happen along the way. This rider can be of great value when what if turns into what now. This could be the difference of a car crash and not being paralyzed from the waist down, but from the neck down. Obviously, if she were paralyzed from the neck down, she would qualify for the 2 of the 6 activities of daily living, and that would trigger the ability for her to use the rider and receive $12,000 a month off of her death benefit until the whole policy is depleted if she were in that situation. But these situations, like a car crash and paralyzation, are very few and farther between. The bigger reality is that something happens to her health, to Mary's health, along the 20-year horizon. If she contracts a ravaging disease like Parkinson's or dementia, this rider helps her provide a long-term care solution into her retirement. You can't have Quality Term if you aren't working with a financially strong carrier with a solid history of client satisfaction and a portfolio of strong products. So Quality Term gives you an option to keep coverage longer. The question is how long and how good are your options? The longer the option to extend, the better. The next question is, what do you allow to convert to? Do they have flexible products or highly loaded conversion options? The best option is to have the choice of any product they offer at the time you want to convert. Here's a question to consider. Do you want any coverage when you die, no matter the age? If the answer is yes, then having some quality term is a good idea. If the answer is no, then I'd ask, what if you change your mind? If the answer is maybe or I don't know right now, then you may want to add some quality term to your portfolio so that you have more options later. If you're in the investment business, consider quality term as a call option to get longer coverage later. If you're in the real estate business, perhaps you consider it as a rent-to-own strategy. So what happens after the rate lock? This is important to know about a policy. Does it end? Does the premium increase drastically? Or does the death benefit reduce drastically? We recently had a situation where a client developed early onset dementia at the age of 65. He was 5 years into his 10-year term policy, and it became apparent that we needed to track this and see where he's at. Now, we expected him to actually pass away in those remaining 5 years, but he didn't. And in the 9th policy year, because he bought quality term, he had the ability to extend coverage. And we designed that coverage to go for another 10 years because we thought for sure he was going to be gone by then. He did live the full initial 10 years of the initial 10-year term policy. And so we had to extend coverage. And because he bought quality term, we had the ability to do so. This saved his policy from reducing from $7.5 million down to $750,000. We did extend the coverage. There was a higher premium due, and 3 years into that, the client finally passed away. But because of quality term, we delivered the full death benefit that he started with. So the most important part of life insurance is to have enough for today. And then perhaps you want to keep your options open for the future. You might not buy all quality coverage, as needs do generally lower over time, but consider adding some to the future flexibility. And so depending on your answer to this question, you might want to add some quality term into the mix. Since we're part of an insurance brokerage operation, we offer a lot of carriers to choose from. When we send numbers to your clients, we choose an option for each of these 3 categories. Strictly term is the lowest cost and often least flexible. Quality term locks in today's good health and offers the most options to adjust in the future. And quality term with more usually means you have additional riders, which may allow you to collect off your death benefit if certain life events hit you while you're alive. But make no mistake about it, it's not just money that buys life insurance, it's good health. For that reason, our process starts with screening your client's health. This helps us with accurate pricing and carrier selection, allows us to properly manage expectations along the way. If quality coverage is desired, we'll choose certain company products over others. And once we find the right fit coverage for each client, we'll apply, underwrite, and put the coverage in force. Then we share a kit with both you and your client to establish a baseline for future policy maintenance. We instantly turn you and your clients into professional shoppers. Thank you for listening to our quality term. This is Rob Barnes with Integrated Insurance Consulting. Have a great day.